My name is Tati Forex in the house. Today I'm going to bring you a compilation of trade recaps. 3 trade recaps that I think bring a lot of value to all of you. I hope so. By the way, the last one was made on 2021, so it was the last trade of the year I took, the last trades of the year I took. It is very important to tell you that the sound quality is not very good, but once I think the value is quite nice, I post it anyway. So what you can do is, if it's being very annoying, just pause it and just finish the video earlier. So that's it. Basically, that's it. Talking about the explicit effects, well, I hope you're being able to follow the journey. Ups, downs, maybe more downs than ups. Well, it is what it is, but at least I'm feeling very good by sharing it. There are some setups from all the trades I took that I could have still avoided, but this is a process. This is a learning process. We're always evolving, adapting. Even when we're doing our job, I think there's always something, if we assess ourselves pretty well, I think there's always something that we can do better, right? There will always be something. If someone tells you, oh, look at this person saying this or that, or look at Tatiana, she's struggling with this and she's struggling with that. Well, if you're not struggling, big ups for you. I'm very happy for you. And this is what we should be all for each other, right? So I've seen a lot of hate in this industry, and it is so sad that people are so frustrated with their own lives. They have to be, because otherwise I can't really know how to justify some things that I've seen. It's very sad that people share hate with each other. Look, I'm very happy to see anyone succeed, well, to be honest, in any aspect of their life, but especially in this industry. I really don't care how you trade. I really don't care if you use flips, if you don't use flips, if you use premium and scan, if you use supply, if you use demand. Whatever you're doing, if it's working, never feel ashamed of it. Feel proud of it. You're in the very small percentage of people that's making money. Now, talking about the people that look at this strategy A or strategy B as something that's stupid, like, I don't really get it. Are you the queen or the king of Forex? Did you create Forex? Like, and even if you did, there will always be people doing things differently. A person that's only able of criticism, it's full of toxicity inside. A person that's actually able to say, well done, congratulations, thank you, sorry. These kind of actions are so important, and especially in this industry, because it seems there's a lack of it. Love each other, just like God taught us to. Whoever may be on that side, thank you very much for being here. Thank you very much for hearing me, even if it's not until the end, because sometimes I get a bit boring, right? But thank you. Thank you very much for being on that side. Thank you very much for sharing my content. Thank you very much for reacting to the post I put on Telegram and sending some love. Because this is what we get from this life, right? The love we have for each other, the way we make people laugh. And I hope that one day that this world can be full of love, full of light, full of positive energy. So yeah, the show is about to get started. Hello everyone, how are you? So today I want to do a very quick trade recap because this is all in line with the outlook I shared with you this morning. I'm going to show you right now. So basically on daily, we were creating a very strong bearish expectation on order flow, and price has been ignoring the demands that we see on the left. So it's just melting all the way through, right? So once in this messy zone, I didn't see anything particular or significant to trade from. The expectation would be that we could keep dropping down until we actually find or mitigate something that was more significant. Once, if we see all this PA over here, it's quite a big mess and there's a lot of liquidity to take. So yeah, my idea and my expectations is that price is going to keep melting. Of course, before it keeps melting, you can still come up and to mitigate something and then keep dropping. But yeah, my mainly expectations were that price is just going to keep melting, right? If we take a look at the 4 hour, so in the 4 hour, what we may see is that, so it's exactly the same happening again, right? Price has been coming up, it mitigates the supply, it comes down, it breaks structure, it creates different supplies, but it didn't come up to mitigate the extreme nor the middle one. It's just mitigated the most recent one that actually caused this 4 hour break of structure. So after it mitigates this, it creates another break of structure, right? So basically we created this break of structure, we mitigated the doji. We know how dojis are significant, right? And then created another boss. And then there was this significant supply over here that was at the premium zone. So it's a high probability supply to trade from. But when we take a look at the 15 minutes, we actually see that there is a supply below this zone. And we have been seeing that the PA is being so strongly bearish that doesn't come to mitigate something above before it keeps melting. And once this was a significant buy to sell, right? Although I don't consider this a break of structure significant on the 15 minutes, this was clearly a buy to sell, right? Look how aggressive price was after this move up happens. Look how aggressively it dropped. So for me, this is a significant supply to trade from. That's why when I put lines, so straight lines, not dotted or dashed, that's for me the most expected thing to happen, right? So this is a tip for all of you when you take a look at my outlooks. Every time I draw a straight line, this is my most expected move, and the dashed is the next, and then the dot is the next. Obviously, I really want to see and to mark all the price may do, because as you know, we don't predict, right? We react. So I was waiting for price to tap this zone. This is where I put my price alert, right? And what I did was just waiting for this. So if you remember, PA this morning did all this. If you just kept on looking at all this, you would just be messed around. So if you're like me and you don't like to watch PA all the time because you're seeing opportunities everywhere, just be humble, set a limit and do something else that will help you improve other skills. Once PA did this, as soon as the price tagged my alert, which was here, I was waiting to see what price was doing. So today I'm not going to play PA because I want this to be even quicker, but dropping you the source, if I am able to drop you source, I wish I am, but I just want you to drop quick source because I know that some of you have given me feedback about thanking how short my trade recaps are. So I'll just keep them like that. When PA reached this zone, right, I knew that price was not at the premium already, okay? Because if we go to the premium zone of the 4 hour, so if we see and if we trace a line here, we know that price didn't mitigate the premium of the 4 hour. Obviously, it would be more probable for me to look for shorts at the upper part of this supply. But if 1 minute was going to show me the confluences I was waiting for, I would be okay to take this trade. So as soon as price tapped my zone, what am I waiting for? You already know, right? So look at my rules. It's easier. Did price mitigate an important point of interest? Yes, it did. Right here. Did price create liquidity? Yes, it did. Look at here. Did price sweeps that inducement? Yes, it did. If we look carefully, this wick that is creating some kind of liquidity or inducement, it's taken, right? Then what am I expecting after? I'm expecting a change of characters. So the low that created this high needs to get taken. For me, the chalk only happens here because this candle over here traded above this one. So, and this candle over here traded above this one. So yeah, my chalk would be here at this point, right? And this would be the demand I was expecting to fail. When PA dropped like this, do we have a flip? No, in this case, we don't have a flip. It shows you the difference between a chalk with a flip, with a chalk without a flip, and just the man failure, right? So what happened here is exactly what happened on the trading view. Look, this demand failed right through. So this is the second example. We have a chalk, but we don't have a flip because price is not really reacting to something significant before it fails. So yeah, just fails right through. So in this case, what am I willing to take? I'm willing to take the extreme, right? So we have all the rules here that I want to see. What do? I set the limit. So there's an important thing here. When you take in this over here, you had two zones that you could have selected. You could refine this to here, or you could actually select the whole buy to sell candle. The more I play these extremes, the more I play the whole buy to sell candle. Why? Because there are some times that I'm not tagged in because I don't select the whole candle. So in this case, always cover the wicks above to make sure you're not stopped just because. So when we have such a candle like this, we have the possibility to take the equilibrium of the candle, this buy to sell candle, or we could take the lows. The problem with this is if we wanted to take the lows, first of all, you wouldn't have a two pip stop loss. And second, if for instance you were just barely covering the highs, you would have been stopped out, by 3, which is ouchy, right? So what we can actually take the equilibrium of the whole buy to sell candle with a 2 pip stop loss, or what we could also do, and that's okay, we could have taken the low part of the buy to sell candle and covering the highs with a little margin to make sure we don't become liquidity. So a 3 pip stop loss would have kept us in. Look at all this void of liquidity being formed here. This was awesome in order to build confidence that this trade would work out, right? What happens next? For the more conservative ones, if you're selecting this zone and you're waiting for confirmation again, well, there's another confirmation here, right? So on this confirmation, what you may see is that we took the highs, we took the lows. So for me, there's a demand failure here, again, showing us that supply is taking control strongly. There's another change of character here. And I would be willing, once there was not like a significant pullback before the failure, I would be willing to take this extreme, right? As you know, as you see, price never came to take me in, nor even if I took the 0% of this zone. When I look left here, we need to adapt, right, to price. If we're predicting, we can't really adapt to what price is doing. So what I did next is just, I went to see why price did react so strong to something. There is a nice inside bar over here, right? And this is like the supply chain forming. And we see again, everything happen here. We took the highs, we took the lows with a change of character and also a break of structure on the 1 minute, and the demand failed again. So there is another potential short here taking from this buy to sell range. This would be another 10R, this also a 10R. As you see, the risk-free here is already assured, so it will be okay to take another trade, because if all the trades come to the stop loss, right, what would happen is we have a break even here and a loss here. So yeah, there's another potential short here for 10R, and then we wait for price to react again. So when price dropped and reacted, okay, this happened here. Let's look left. What price is reacting to? Oh, there's a demand here. Nice. Let's look right. What happened? Oh, it failed, right? It failed right here. So what caused the failure? Let's look at the extreme before the reaction to this demand. Where is it? It's right here. So this extreme, if you selected the whole buy to sell zone, okay, you would have been tagged in. But if you're selecting just this doji, which would be what I have done, because there's not an engulfing buy here, so I would select this doji here. Yeah, we wouldn't have been tagged in, and that's literally part of the business. So this was a 20-hour potential day. Yeah. If you didn't cover the highs with a proper stop loss, you would have been stopped out at here. And you know, as everyone says, don't be greedy trying to take the most of the trades. Like, cover the highs with a little buffer to make sure that you stay in the trade, right? So just wanted to reach out and drop a little nugget in the end. Guys, it is very important that we build our story before we act. If you take a look at our morning outlooks, we do it for you and for us. So it's very important for us in the morning to try to understand what price is doing and why. Let's draw the zones, let's draw the demand, let's draw the lines and see, okay, if price do this, what will it react to? When it reacts to this, what is expected to do? When we say don't predict, we don't say don't try to plan what is expected. Of course, we need to plan what is expected because we need to be ready to react. What we can't do is have a fixed bias like, oh, this is my supply and I'll wait for ages until price reacts to this supply. No, that's the thing we say about not predicting. If you have a fixed bias, you will not be able to play as much opportunities as if you don't. So today is a very good example because if you take a look at the 15 minutes, if you were waiting for price to tap the equilibrium indefinitely, you wouldn't take all these shorts opportunities. As you see, price didn't mitigate the equilibrium, right? But we had short opportunities. So it will be more than okay to play those, especially if you have confluences that are in line with your expectation order flow. As you can also see here, there's also a 15-minute change of character that would have kept you in these shorts, confirming even stronger that supply was taking control. So what we need to do, making sure we do our top-down analysis and we go through at least daily 4-hour and 15 minutes every single day, because this exercise, and I'm talking about myself, like this exercise of what am I expecting with the daily? Okay, what am I expecting with the 4-hour? Okay, what am I expecting with the 15 minutes? This top-down analysis will be what's going to help you be ready to react when PA is providing. Because if you don't do this top-down analysis, you're just going to be in the middle of nowhere and not knowing where to trade from, not knowing where the zones, not knowing the more and the higher probability trades. So yeah, just make sure you do your top-down analysis. If you need any help, just shoot. We're all here to help you. Hello everyone. How are you? Tatiana again here. Hope you're enjoying my content. And today I'm going to do a trade breakdown. First of all, as usual, I'm going to share outlooks from this morning. Daily, we're inside a pullback, okay? And we're also inside a supply that caused this flip, but we're not yet well in price. So if we draw our fib tool with the swing high and the swing low, so we understand that the better prices to show will be around these areas, right? It's not that price cannot react to this demand and come down. Yes, it can. But the better price to look for shorts will always be here, right? So then looking at the 4-hour, what do we see? Price is reacting to this demand that caused this supply to fail. Price reacts to this supply with this wick, came down, and then boom. So conjunction of wicks, that's why I traced the demand here, caused this 4-hour supply, right? And we're now turning bullish. We didn't confirm this order flow yet because we will confirm this when we confirm a new higher low.
but we're now building bullish order flow, right? So when we're building bullish order flow, what are we expecting next? So we expect that price comes to a higher supply to cause a break of structure and then confirming this higher low, right? So the thing is, we tapped the equilibrium of the 4-hour leg. And we know how important it is when we tap the equilibrium, because it means that price is now in a good price to buy, right? So what I was expecting, of course, this demand could also be a target because price could just be inside a complex pullback of the bullish order flow that it is building to then come to break the structure. But once we react to this 4-hour demand, which is also a supply to demand, supply lost control, demand took control, and we also tap the 4-hour equilibrium zone, we're building more than one confirmation that price may actually create a break of structure because it's doing all this, okay? It's reacting to a demand that caused the failure of the supply, and also it mitigated the discounted zone of the 4-hour leg. So when we go to the 15-minute, what do we see? So this is in Team Outlooks. You just have to take a look. I share these every morning. So when we take a look at this, what do we see? Okay, so we see that we react to a 15-minute supply and then it failed, right? So demand is clearly taking control, okay? Price is tapping the sell to buy zones, building bullish order flow. So when price does this, when this significant supply this is a doji, okay? We know how price tends to respect the dojis, and this doji was in the middle of this range that caused this very aggressive momentum. So this doji is a zone that should have at least created a reaction to mitigate demand, right? So at least this doji should have gave a reaction to mitigate this demand over here, but it didn't. So if it didn't and it failed, this is now my demand zone that I would look for longs. So yeah, there is this high that may be protected, and we still have this supply here, so we can look for shorts here. But building the bullish expectational order flow, being this now very strong because it caused the failure of the supply, I'm willing to take longs from here. Yes, you could have taken shorts from here, but the high probabilities trades will rely on this because we're heading to the 4-hour POI. So basically what price did is, let's play price. So yeah. So I had my price alert on this 15-minute supply to demand zone. Yeah, there could have been shorts coming from here to this demand, but for me, the high probability trades at the moment would be longs from here. So what did I do? I waited for price to tap this demand, as it did, and I waited for confluences to play my normal rules. But if you take a look, yeah, there's a potential chalk here, right? But the problem is, after this demand, this supply that we can refine to this wick failed, we didn't have any opportunity to get in. Look, it failed here. So even if you took the decisional and you could look at this, price never really come to mitigate it. Look what happens next. Price just failed. So what caused the failure? If we see this failed here, right? The supply didn't hold, so demand is taking control. So at the moment, is it expectable that price can come all the way down to mitigate something significant here? Well, we can take a look at the 15 minutes. Well, yeah, it can come down to mitigate this doji, but this was a very significant supply that didn't hold. So I can take a trade from the zone that caused this failure. And why? Because when this failed, the other point that would be my target would be this, right? Because it mitigates the supply, comes to the demand. And now what is the next move? The next move is if it mitigates the supply, comes to the demand, and then that supply fails, Well, my next move is it's going to come to the next 15-minute supply, right? So let's look at order flow. What happened? So basically what happened is we reacted to a 15-minute supply that didn't hold, didn't come down to mitigate the demand. So then we tapped a 15-minute supply. We came down to mitigate the demand that caused this failure of the supply, right? And now we came up and this supply also failed. What is the zone that created the failure of this supply? Well, it's right here in this sell to buy. This was the last sell to buy that caused the 15-minute supply failure. So what is the next move here? Once we didn't react off of nothing significant on the left, for me, so following the expectation of order flow, before price come to mitigate this demand over here, it needs to first come to mitigate the supply, because this is order flow, okay? Obviously, we know that price didn't do this. Price came all the way down, all the way up to the 4-hour. And why? Because this is following the 4-hour expectational order flow. So if price broke the supply and reacted to the demand that caused this supply failure, well, my expectations now are that price breaks structure and mitigates something significant before coming down. It's all aligned. 15-minute is aligned. 4 hours in line, and we know that we came from the discounted zone of the 4-hour leg. So what is the next expectable thing to happen? Price mitigates the 4-hour supply. So I would be willing to take trades from here to this supply, at least, because price could do this, then mitigate the 15-minute zone, then did this. So what are the potentials here? Well, the potentials are we can place a long here, and the next important zone is here. That's this 10-minute inside bar that price can react to. And if we see, it's already risk-free when it taps that. So yeah, I would be willing to take this trade because it's already risk-free when it taps that. And we know that 15-minute zones will take precedent over the 10-minute zones. So it's okay. Look what price did. Boom. Price mitigated this range, this sell to buy that caused the supply failure, right? And then what did it do? Let's see what happened. So there's a continuation here that caused the break of structure that you could have taken. Yeah, there is. But this is way more aggressive because price is coming to a 10-minute inside bar and price could just do this to then come down, don't come up, right? So this is a more aggressive one. If you're playing the expectations of the 4-hour and you expect that price reach the 4-hour zone, this would actually be interesting to take because if it's coming to mitigate the extreme to then come down, it would be risk-free already, right? So imagine price did this. So price reacted to the 10-minute supply, price generates liquidity, mitigates the demand to then mitigate an extreme and come down. So if price did this, you would be risk-free already. So for some, this could compensate. So yeah, let's see what price does next. Boom, price mitigates this. You could have actually used just the wick because, you know, there's shit in wicks. So if this reaction failed to actually create a lower low, it's because the probabilities that it will hold are smaller, right? So now if I see a failure of this supply of these extremes, right? These extremes, either this or actually this whole buy to sell, I'll be willing to take another long. This is risk-free already. If it breaks it, let's see, boom. Look what happened. This is risk-free already, right? The first one and the second one is risk-free already. So the max that can happen to us right now is ending up with 0. So what caused this supply not to hold? If you take a look, well, this is actually the whole sell to buy that we can refine to here that caused the supply to not hold. So it caused a failed reaction. So this is another long we can take, again, to the 15-minute zone. We can actually, again, if it's in your plan, refine it to the wicks if you'd like. 2 pips stop loss, and so 10 are there, 10 are there, and 10 are there. And look what happened next. Not only price comes to mitigate the supply, but it also, as in line with the higher time frame expectational order flow, it came to mitigate the 4-hour supply. Yep. And that's it, boys and girls. So this is actually based in flips, right? So, and these reactions based in flips, when are very corrective, they give a lot of opportunities. So this is another way of entering the market when the extremes seem not to be holding. There may be a chance for you to get in when something significant happens. Of course, I'm not playing these reactions off of 1 minute zones, as you see, right? I'm playing these reactions and these flips off of significant zones. There's a 15-minute supply over here, there's a 10-minute supply over here, and I was targeting the next 15-minute supply. So yeah, I hope you enjoyed that. These were 30 in barely, well, 1 hour, 1 hour and 12 minutes. And yeah, this is in line with the first trade recap I did about flips. Flips are very strong and normally hold pretty well, especially when the price is being corrective like this. Don't do it if you don't feel confident enough. But yeah, when we don't have opportunity to get in at the extreme, we may have an opportunity to get in based in flips. Hello, everyone. Hope you're having an amazing week.
By the way, the sound is very bad again. The sound quality is very bad, so I don't feel sad at all if you just leave now because you're annoyed by the sound distortion. But once I really enjoyed this trade recap, and I couldn't even go back, even if I wanted, I couldn't even go back to the 1 minute chart, so I couldn't redo it even if I wanted. So once I did this trade recap, I hope you take value from this. Don't get annoyed. Don't forget to please subscribe, hit like button, and activate the notification. Share my video if you're liking with your friends. Who knows, your family if you have someone doing Forex. And yeah, help me spread my words. I'll help you with your struggles the max I can.
Basically following what I said on the morning outlook. So in daily, what I was seeing is that we were inside of this massive range. Yes, we have liquidity that's being swept time after time. And we have all this said liquidity resting above, which tells me that we have a higher cause for price to come up, either to also mitigate a premium supply. So the expectation is that we had more cause for higher prices. But anyway, we're inside this massive daily range. So we have to go to a lower time frame, which is actually still a higher time frame, to understand what's going on. So if we go to the 4 hour, what do we see? So what we see is that price has been sweeping all the liquidity, but is actually keeping all this liquidity over here. So for me, it was expected that this liquidity was going to be ran and actually mitigate something above in order either to continue with the expectation order flow and break below, or to just have some sort of reaction here and still continuing up to then react to this extreme week, or ultimately have a reaction also here and then coming up to mitigate the daily supply inside premium zone. Why? Because let's remember we are inside a weekly zone. So what is expected when we are inside a weekly zone? That price is going to come up, right? So either to just mitigate supply inside daily premium, or actually going above to continue with the expectation order flow from weekly. So now that we see all these possibilities, what are we going to play? So obviously this morning, if I go back with price, so this morning is the 22nd and this is 6 a.m. So yeah, let's go back this. So when I woke up this morning, basically I was here, right? So we were in here. I saw all this liquidity below being swept by this wick, and I see all the buy side liquidity still resting, right? So once I saw all that liquidity still resting above and price not actually mitigating nothing relevant, I am expecting that after this reaction to this demand, price is still going up. So I went down to the 15 minute. So we know in daily we are bearish. We know in 4 hour we are bearish, and we know that on the 15 minutes we are still bearish inside this massive range, right? So once we're inside this massive range, we really need to understand what price is doing and what kind of liquidity is it grabbing if we want to play this range, because otherwise we're just going to get burned. So when we come to the 15 minutes, what do we see like more recently? We see recently that we are respecting mainly demand over supply. And why is that? Because if we take a look carefully, we can't see a supply actually causing a break below. So this supply failed to break below. This supply failed to break below. Although we see some demand not following through, because when we see here, there's actually a demand chain failing, but we ultimately see that when price is mitigating the supplies, is not being able to create a lower low. So this tells me that demand is taking control over supply. On the other hand, we see that all the liquidity is being grabbed, and here we see the same. So what do we have here again? We have a change of character on the 15 minute, which tells me that demand may now ready to take control again over supply. And we see that actually this last reaction was strong, but not enough to create a break, which may tell us, okay, price is ready to go up. And where may it go? There we have two scenarios. We have the possibility that price goes to this doji, which is actually sometimes we see price reacting to 15-minute doji, because if we consider this as a demand, once it caused the break of structure here, right, what we see is that this may be the reaction to it, and then it causes the failure, right? So this is actually a doji that can be relevant if prices wants to continue lower. Then we can also see price reacting to this. Then we can now also see price reacting to this and breaking below. Or we could see price just wanting to come up to mitigate this zone again. This is not very significant, this zone, because it was tapped already. So we may consider it mitigated. And we also may consider this buy-side liquidity. What we need to do is to go to the 1 minute and see if price is actually going to provide something important. Because if we see here, not only price mitigated this demand, but it actually formed another change of character here, which gives us more confluences and confirmations that price may be wanting to go above and just respect the demand chain. When we actually go here, we see price doing this change of character, okay? Bullish chalk to confirm the long. We see price creating all this liquidity over here, all this liquidity below, right? We see price reacting to this supply and failing. So it reacts. This is the reaction to the supply, and it fails, automatically fails. So once there is not a decisional here, I'll be always willing to play the extreme, right? So I wanted to price to deliver cause for me to enter on this trade, and it actually did. And what happens is that I placed an entry on the extreme. Why? Because all the rules I want to see are already met. Remember all my rules. First, mitigation of a higher time frame point of interest. Done. It did right here. Second, create some sort of an inducement or liquidity. Done. It's here. And actually, I love when this liquidity or inducement is formed inside a specific zone, either a demand or a supply. When it's built inside, the probabilities for me to be successful increase, because look at this. Price actually formed this kind of liquidity, but when it sweeps it the first time, it's actually a trap for buyers in a rush. We see price doing this change of character. Once the supply failed, I placed my long here. Why? Because all the rules I want to see are already met. What did price do? Price came here. It came all the way down. And look what price did next. So basically, when I put this entry here, I selected the 2 pips because, first of all, I love using 2 pip stop loss. And second, because I was covering the lows of this demand. Look how lucky I was to cover the lows, because this actually came to grab all the liquidity resting below also here. So if you use the tight stop loss, this could be a loss for you. But anyways, we know that the higher probability trades remain on taking longs because there is more cause for higher prices than there is for lower prices. So after price mitigates this demand, and what happened next? So we see that we swept the lows here, forming the first part of the chalk. We reacted to this supply that caused this break, right? And then we either came lower here, right? We either came lower here, which changes the chalk to this, okay? And then you can actually use this to be a chalk. We have a change of character, we have a reaction to this zone, and we have a failure of the supply. So I'm willing to take the extreme. And let's look. Price comes to the extreme, boom, there he goes. And then what does it do? Look, there's another supply here, right? This is a buy to sell, this is a buy to sell. That's why I select supply. So when you didn't catch the first, nor you caught the second, what can you do? Well, see how price is reacting to supplies to get in. This is a buy to sell, so we know buy to sell zones are quite strong. And even if you selected all this, it actually failed here. Second supply reaction, so we have the reaction here. And then price came all the way down to mitigate that, boom, and ultimately it failed this third flip, forming this third flip. So there's actually a third entry right here. What price does next? Price reacts to this inside bar, which is actually a buy to sell also. Comes to mitigate the third entry. At this moment, the first entry is not break even yet, but the second entry is break even already, right? So price went all the way up. It can still react from this supply and melt. So let's see what it does. Boom. Finally, ultimately fail this zone. Why did I select this demand as my entry? Well, because there's a sell to buy and there's a slightly ran of liquidity over here. And if we see, this is actually a pullback. It's not just bullish candles coming up like this. Look at this flip. This flip, although it had a little reaction, it's just one move. It doesn't sweep the liquidity, right? If we see this bullish candle over here, this bearish candle after this bullish candle actually swept all this liquidity here. I can play the decisional, but yeah, we always have a possibility that price came to mitigate this week and stop us out. But well, it is what it is. This one is break even already. As you know, I always use break free at 4R. And yeah, as you see, this one was break free already, and this one was break free already. So it's worth the risk, even if it's going to come to the extreme and then continue to go up. We know that candles that sweep liquidity are high probability candles, right? So if this sweeps liquidity, it for me increases the confirmation that it just can drive from here, because it's sweeping the liquidity and going, sweeping the liquidity and going, sweeping the liquidity and going. And here we have exactly the same. Look, we have liquidity being formed over here, which actually confirmates even more that this decision is going to play out. And on the other hand, we actually have here another reaction to another supply that form all this liquidity also over here. And then afterwards, it ultimately failed, right? This second flip which is actually this candle over here, this buy to sell, this little buy to sell range. It reacted to it and it failed. And you tell me, oh, Tatiana, why not taking these? First of all, it didn't grab any liquidity. And second, because I had a high probability, unmitigated zone that price could come from. That's why I'm not willing to play anything here, because this flip occurred and it wasn't mitigated yet. Another entry here, it actually came lower, as you see, came lower to grab this liquidity over here, but ultimately it respected this last candle, which if you see, it's like you could have entered on the equilibrium of this whole sell to buy range and it would give you an even better This is how you can say, like, where should I enter and why? Here we have a clear sell with big body candles, a sell to buy. We see that here price was manipulated to come lower to then go high. So we may understand that this low is highly likely to be protected, not only because it swept the liquidity on the left, but also because it caused the failure of the supply and price was heavily manipulated to go down and then go up. Then we see price respecting that zone, creating some sort of liquidity here, and then boom. This zone over here, which is actually a buy to sell also, had a really nice reaction here, but didn't fail. It was respected, and boom, it caused another break and failure of the supply. So there's actually another potential entry here. Of course, you still have the doji. What were going to be your targets? Either your targets could be this doji here because you were being conservative and actually because this would give you a nice 25R. And yes, it's true, price ran all the way up. So if I actually select the one that has nice RR, this is actually 50R. And I'm just talking about one trade. But I got in, I got out, I took my money, and I'm happy about it. We can always fixate our minds like, oh no, if I held, might take profit longer. Or if I just held, might take profit longer. Well, yeah, okay, but what if it reversed because the overall expectation order flow is bearish, and then you thought, oh, why didn't I close earlier? That's the thing. Just stick to your risk management. I like 10R there, keeps the doubt away. The more greedy I am, the more slaps in the face I get. What happened next? So price came to mitigate this entry. This was actually a perfect entry. How to select a high probability zone to enter from? Well, make sure it grabs liquidity. Make sure it is a sell to buy. And for me, it needs to be the last sell to buy that causes the failure. Where do you see that price is being manipulated the last time before it was heavily and aggressively moving in a certain direction? For me, it's here. This is the last sell to buy that caused this failure over here, right? And obviously, I only placed this zones after I saw price reacting to it. So I saw price reacting here. I saw, okay, what is it reacting to? Oh, it's reacting here. I saw price reacting here. Oh, what is it reacting to? Oh, it's reacting to this buy to sell, and so on, so on, so on. Because look at this. I have here also a buy to sell, but I have no clear reaction here to make me want to trade this failure, this flip, right? I really need to have a reaction, some sort of reaction, as I had here, as I had here, as I had here. You see, these are reactions I want to see and I want to play once they fail. The fifth entry is exactly that. It's playing exactly the same thing. And then price came all the way up, boom, 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 all the way up, bum, 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 bum. This is it. So at the beginning, the first trade, I want to see all my 7 rules playing. First, mitigation of higher time frame zone. Second, some sort of liquidity being built. Third, sweep of that liquidity. Fourth, I want to see a change of character and a supply, or in this case, supply because we're going bullish, and a supply failure. 6, I set my limits, and 7, boom, I smash El Papi. For me, very important to retain from these trades is, some of you may feel really bad because you say, oh, why didn't I take this trade to at least the 4-hour supply
because it was actually a significant zone. So first of all, I would like to say that, yeah, we could have had it now. Sorry guys. We could have held the trades longer, knowing that the 4-hour high is weak. Yeah, this is weak. Both the high and the lows are weak, right? And so if price is now respecting the demand chain, I'm expecting that this high may go or this low may go. So why didn't I select my profit as this buy to sell exactly like I put it on the morning outlook? Many times I get slapped in the face because price is just going to go with the expectational order flow. If this was in line with the expectational order flow from the 15-minute and from the 4-hour and everything was aligned, and we weren't inside this massive range, okay, I can target a higher zone. But once we are inside of this massive range and we have seen price just running through zones that we are expecting to be respected because we are inside the range, well, at this moment, I really want to get in. If I am going to trade, because we may not trade ranges, but if you're trading ranges, well, my advice is just get in, bang some R, and get out. Because, yeah, price went all the way up, and that's very nice. It could have made 10% of my account today, that's true. But I'm happy with the result I have, and we should always be grateful with the result we have. Like, even if I just did a 10-hour today from all these opportunities, right? I did a 10-hour, and I'm happy with my 10-hour because I just need to keep consistently making 10-hour day to completely change my life. Especially when you have a funded account and you have a high capital to trade from. So don't be sad if you didn't take some of this. And actually don't be sad if you didn't take any of this. Because market provides daily. Okay? Market provides daily. And there is not a single problem that you didn't catch all this. Please be mindful of that. Because the more negative feeling and the more negative emotions you deliver to the market, the more you will get that in return. If you grabbed one of this, well done. If you grabbed 10R, well done. If you banked way more than that, well done. If you didn't play any of this because it didn't fit your plan, well done. If you didn't hit the button because you were afraid, well, work on that. Why didn't you hit the button? What was happening? Is something on a checklist that is not being right? And if everything aligned with your trading plan, why didn't you take the trade? You need to work on that and see how can you get better. But don't feel bad. Give yourself room to fail and to evolve, adapt and grow from it. Because there is no success without failures. So if you didn't take all of this, or if you just took 10R, be grateful with what the market provided you, even if it was a loss. Imagine you put this stop loss too high and you had a loss over here. Well, it is what it is. Don't be sad about it. Just make sure you can refine your trading plan to maybe if the trade provides later that you are okay to take another trade even if you took a loss. Or just make sure you cover the lows from a specific demand that price can just come lower to sweep the liquidity. I absolutely love flips, so when my 7 rules are met for the first trade, the only thing I'm looking again for confirmation entries, double confirmation entries or whatever, is reaction to a specific supply, swap of liquidity, boom, set the limit, go, set the limit, go. Is it the previous break even? Okay, I'm ready to take the next. Is it the previous break even? I'm ready to take the next.
And that's it, ladies and gents. Hope you enjoyed it. This was a compilation. So basically it was 20R plus 30R plus 58R, which makes the count for 108. It's true that if we got the take profits to a further zone to a 4-hour supply, especially the last one, for instance, we could have get like 200R in just those 3 or 4 trades. But I wanted to keep this as realistical as possible because 200R a day may be possible for some. For me, it's not doable. One of our main enemies is actually when we get like a several winning trades, one after another, and that can actually sometimes mess with our confidence, because we'll feel like,
I got this. I have a superpower now. No trade can touch us.
and then you get like 5 slaps in a row or whatever, and then you say, ooh. So overconfidence is, in my opinion, one of the worst enemies of a trader. Woo! That was it. Finish. Gratitude is the fastest way to raise your vibrations so you can attract the life of your dreams. God bless you all. Have a wonderful week. Take care. Peace.